All right, what's going on, guys? Here is another idea I wanted to put out. And then again, this is the one that we can circle back on, as time passes to see how we're doing. Let me just throw this on here so I know to reference this. And obviously we could check um, the streams in the past. But basically, here's one I want to get long, which of course Western Union, money senders, um, basically looking good. Um, it bottomed in December, November here. Right off the support. Other videos I told you, I showed how things can gap up and come. I think Microsoft was one of the ones that looked just like this. Let me go see that pattern. Yeah, yeah. See how Microsoft filled this gap and then ripped? I went live so you could check that out. But let me go back to Woo. So you see how Woo filled that gap and then bottom just like Microsoft is. Microsoft's like right here right now. And then, so if anything, Microsoft could rip, just showing you a pattern example, and how my brain came across it. But anyways, this thing looks ready to rip. Now the POC, the volume has not moved up yet with price, but it should if we get more orders flow coming in here. The momentum made a new high off this momentum, and is catching up to these two. So momentum is going higher with price, which is ideal. We want momentum to make a new high, and then we want to get in on a pullback here. And you can either buy common shares here. It's pretty cheap at 10 bucks a share. Um, or you can look to do some calls here. These are basically leaps for 2028. So not 27 January, 28 January. So basically you could buy these now, the 15 strikes, meaning, let me clean this. Meaning you're buying the strike all the way up here, which is basically like kind of like a target area. Where this high, the high this made was back in 2021 April was 18 bucks a share. The 15 strike is around the highs of February 22. So if we were to go holler at the 15 strike here, 1, 21, 28, 15 calls. So we could throw that in there to see. So if you were to go buy those, ideally we want to try to get a pullback on the daily or the 1 hour so your calls are cheaper. You can see this is breaking out. So you could go start working the bid. And I don't use this for options, but it doesn't have it has certain Greeks, but it doesn't have open interest. I'm a huge fan of open interest in my trading just to see where, you know, the order flow is at, where contracts are building. Volume is cute, but it doesn't know, if these are opening or closing. Open interest tells you how many mofos are committed out there in the market. Where you could see that this is bid is 40, ask is 70. So you got a 30-cent spread, but again, you're going to be holding this for a long time. Um, and you can look to work this on the chart. Um, where was that at? Hold on. How did I pull that up before? I think I double clicked this. Yeah, here it was. Yeah, here it was. So here you could see this was trading at um essentially 35 cents earlier in January. Um or I'm sorry, yeah, I think it was February. So about 35 cents, now it's at 55 again because this has um rallied. So the bid is 55, meaning you're not going to pay 40 cents, you're not going to pay 70, so you could work that bid, or you could put a 45 bid, 35 bid, meaning you would be working this so you could look to get filled. This is the options itself of the chart of this optional option, which we could set alerts on too, just to see. Um, so like ideally, there's the 50 bid there. So if this can pull back into here, which this will do that if this pulls back. Now this may be already ready to go because it broke out here, broke out and pulled back and went higher. So this, I try not to chase. Let me go look at the 1 hour. So essentially for this idea, and it's hugging. So if this could pull back, price could pull back to this blue or line and maintain the green paint, that is what you want. Because then if this can get back down to 10, 990, $9 area, then this also will be less costing. So, if you can get in this for 40 cents, 35 cents, 45 cents, or even 50 would be a fair entry that you worked if you worked that bid. So that would be what I would be looking to do. Again, I'm in a few of these. I am in the commons as well, but I wanted to share um, this one as a trade idea um, to go long Western Union. Um, and essentially, again, the target would usually be where your strike is, because if you buy this 15 strike here, when it's at $10, that means it's got to go $5 to be for you to be in the money. Which there's plenty of time, so you can't get stopped. I like doing long dated options because it's cheaper than stock, so you have embedded leverage. You can't get stopped out. Your risk is defined. You can only lose what you pay. And you can even do verticals if you wanted to cap your upside and also your downside or make it cheaper. But, again, that's why I'm a huge fan of options. And then this is a $10 stock, so it's not breaking the bank. Now, for where I would look to maybe stop out on this would be anywhere, around this area, essentially. So kind of like right under that low where you would stop out if price got back under the 9 area, um, you would look to stop out. And then again, this target would go all the way up to that 15 item that we have marked, essentially as kind of like, oh shit, hold on. Here we go. And we can narrow this up so it's not so massive. But yeah, so that's that. So we have the entry anywhere around here to be entering. Ideally, you want to try to get in on a pullback if you can, because that'll make the option cheaper or the shares cheaper. But you can go ahead and buy at market on Monday. You know, again, this isn't a huge stock, so you could throw $100 at it and you have 10 shares roughly, and then you could see what happens. But I believe this market is going to go higher based off this pattern. And I'm basically a technical trader and a pattern trader. All I really care about is, volume, liquidity, open interest, or what have you. And this checks all the boxes. And you can see that the volume is also, fatter these past 3 days as well, and kind of like sloping up now, which is what you want to see. So you have momentum, you know, trying to moon. You have the volume coming with the fatter volume bars, and there's a lot of volume, 12 million, 13 million up here, just like you had the big volume here. That was a sign, um, that we're going to go higher. Of course, it has to shake people out and then go. So that's, again, the idea here. So the idea is to get long this however you wish, however you want to get long, and then look to hold. You want to stop out, maybe around here. And then you could always reevaluate because maybe we come into range, stop you out, and then it catches bids. But it's all about, keeping your losers small and managing that risk. So again, I'm a fan of going long this and expecting it higher. And then we'll keep tabs on this as time passes. Here's a weekly chart. This will just kind of clean it up a bit, and then you see what we're looking to get to. So ideally, you want this little punk to get up to that 15. And then you could take some contracts off if you have 10 on, take off 5 and then let the other 5 ride, but then they'll be trading a different. The risk profile changes. If you buy an option down here, a 15 strike call when the price is down here, you're only getting, I think it was 15 delta or 7 delta, meaning you only own 7 shares of